Hi folks, how you doing today? Hope you're doing well. So let's go over my trade review. Same as usual here. So here are my trades. I traded QQQ. The Qs were stronger this morning, so I was bullish. I entered at 9:45 and 9:50, and I exited around 1 p.m. after 1 p.m. Okay, so those are all my executions, commissions, and everything. So I will now show you the same executions on the chart. Okay, so take a look here. Now, my reason for trading the tech sector was because of how it was stronger versus the financial sector and SPY. All right. The high of yesterday we were watching on SPY, and you can see that we opened above the high of yesterday and we moved down originally to test that level, which was approximately 278-ish. All right. Now the NASDAQ was a lot further away from its high of yesterday on the open. Okay, we opened down here around 208, 209 or so. And obviously that resistance was in play. That 208.60 something resistance was in play this morning for quite a while. So basically, what kept me long in the trade was the fact that the bid would not drop. All right. So I'll show, those are my entries right there. And basically what happened was we moved up, tried to test the resistance of the 209.68, and we topped out at 88 here. We moved lower, and on this right here, I entered at 9:45 and then again at 9:50 with that bull put credit spread on the Qs. And the short strike was about, it was 208. So basically I was close to the trading price because I was not expecting this 208.50 to give up. So basically my reason for entering that trade was the fact that the bid was holding at 208.50, and that's it. Nothing more complicated than that. So if the bid was going to drop below 208.50 and continue selling below the low of the day, I was going to protect the trade by covering the short put and riding out the long put. All right, because at that point, if we see a dropping bid, then it makes sense that we're going to see another leg down at that point. Okay. So again, I was basically risking off of this low of the day here, 208.50. I entered the trade and then started the chop session. So let's use the replay function here. So we saw a move up to test again, 209.50. We rejected it another time, stayed in the trading range. We came down to test 208.50 another time. Again, the bears were not strong enough to push it. So we had what is called a double hold of the exponential moving average. So we saw first time right there with some volume. Second time right there, the bears just couldn't push it below here. So again, that held bid. I'm going to be long if the bid's holding, okay? So again, we just chopped around this resistance. We tried once here to push it above the 210. Now, and then look at what happened after. We pulled back again to the moving average, and I said, okay, we're chopping around here, 209. If we go below 209 and start closing below 209, I will exit. The bid held at 209. So I entered here a long call option, expecting this moving average to hold, and we were going to see another leg up. And my target was going to be this 211.16 or just below 211, expecting us to at least reach the high of yesterday, okay? And that was going to be basically my profit target. And you can see, look at this barbed wire trading action right here. So I purchased the contract here. It was the 217 call option, and it was trading around 44 here. I purchased it here for 44, and basically I rode the price up all the way back here from 209 all the way up to just about 210, and there was no profit in that contract in this entire move right here. So talk about premium decay, and that's why I was glad that I was short the puts, because if I was just long the calls here, not a lot of fun, okay? And you can see how we're just chopping around, constantly trying to break this 210 area and then getting rejected, but neither side of the trade is getting follow through. So that's what kept me bullish, is that the bid was holding, and that people were likely trying to short this top here, thinking it was going to be a top, because we are into resistance if you look at the 6-hour or 12-hour chart. So it makes sense for people to short it. But we do know that in the short term, if people are trying to short it, they're likely going to get squeezed out. So look at how we reacted here. I exited half of my short put position right there around 12.20, and we just chopped. We got a nice pop here around 12.40, and look how it got just sold right into, and then we came back down to hold that 209.80 area that was holding previously. We got another double hold of the moving average, and then since we got that double hold, the price just moved up from there. Now I was out of the trade completely by here, by 116 and 119 were my exits on the trade, but obviously the trade moved up after that, to hit my profit target, and I wasn't in the trade anymore, and we're still moving higher. So that call option I bought at 44 is now at 61, but it was largely chopping around in this whole register right here. There was no profit on that contract. So imagine that you buy at 209, it's at 210, and there's no profit. So that's options for you guys. You need to know if you're on the right side of volatility. Very important. So yeah, I'm barely green on the day. Even if I had, look at these entries, they look almost flawless in the chart, right? I entered right here, exited right here, but I'm barely green, just by about 1.5% in my account. Using the tape to determine my trading direction has been very beneficial the last few days here, and looking for those held bids, those held offers. And honestly, just giving the benefit of the doubt to the side that is holding better. There's no other way to say it here. So yeah, long option buyers today had to sit through some chop to make some money. And sometimes it's like that. All right, guys, so I'm going to leave it there for today. And if you learned something from this video, please give it a thumbs up. And also let me know if you found the Easter egg in the video. Take care. Bye.